Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Parmar.
Welcome to the Monday section of Wealth Matters podcast. Usually I record the Monday episodes a week before, but this one I'm releasing just to discuss about what's going on with Terra, Luna, and UST. So this is why I'm recording on Friday, May 13th. And if things could have changed over the weekend, please bear with me, and I apologize if things have changed totally. But I want to talk about one of my favorite coins. Used to be, of course, not anymore. And I don't like to brag all the time. I have lost some money on Terra Luna now because of what happened. So what exactly happened with Terra Luna? This was crazy because Terra is a platform. Luna is a platform, and it's basically powered by Luna as the governance coin. But the main reason Terra exists is for UST. It's their Terra UST. That's the version of their US dollar per se. And pretty much the whole purpose of having that stable coin UST similar to USDT, USDC is that it stays, it's $1 all the time. That has to be a peg. So basically something happened, I would say about 4 days ago. And what happened is that we want to dissect that, why exactly happened, this happened, right? So Terra was a high flying, like a crypto, like a stock. It was killing it. Just a month ago, it was close to $117, $118. As of today, it's I think 0.004 cents. So this thing could happen with any stock, any cryptos, any of those kind of assets which are very volatile and can go up and go down significantly. And none of us thought that this would happen. So what I think happened is that industry level UST grew too big too fast, right? And Terra did not realize that they need to keep this intact, right? They had to make sure that the UST peg does not disappear. So a lot of things I learned, right? So Anchor protocol is one of the protocol Terra was using, and it was paying out 20% per year interest if someone stakes their UST on Anchor protocol. So Anchor was no Ponzi. It was like Jeff Bezos selling a convertible bond in Amazon in February of 2000, right? A low probability future dream at very high cost, right? So the same way Terra simultaneously started renting capital at scale, onboard new users into Anchor protocol and scale its network. But sometimes those bets don't work. By December 2021, with the launch of DZenBox, Anchor had strayed very far from its original mission, right? So they started focusing on other stuff. So now they have a couple $100 million of deposits into $1.2 billion of UST at 100% annual yield. This is crazy. No one could think that this is sustainable. The crypto crash of just this Jan and Feb killed off the DZenBox, right? So now there was more stress on Anchor, and it offered Terra a golden opportunity to cut deposit rates to more sustainable levels and punish looping, right? But that did not happen. And during first quarter of this year, Anchor turned into an obvious systematic risk for the Terra protocol. Bigger and bigger sums of UST were parked there, doing nothing else within the broader ecosystem. So basically people were just parking money, trying to, make as much yield as possible. And this money was not doing anything, and they were just paying 20%, 23% for that money to just sit there. Someone's got to use that money. Even when we put our money in the bank turns around and lends that money, right? Bank is not just going to be able to pay us even that measly 0.5 or 1% interest if they cannot turn around and then lend out our money for 4, 5, 6% interest, right? So that's the key. So there was more and more pressure. So now to finance this unproductive anchor deposits, Terra had to dump large amounts of Luna onto the market, right? So Terra was in fact shorting its own governance token to subsidize the growing systemic risk of idle anchor deposits. Terra at the same time decided that it should move from a zero collateralization model to a diversified collateralization model. This required more Luna to be sold, and then they exchange it for the BTC, which is the preferred collateral. This was again a debatable move, and it made sense at the time to most people, right? But to create corresponding Luna burn to offset the second wave of Luna issuance, Do Kwon, he's the founder of the Terra Luna, he made his most critical mistake. He listed UST on a centralized exchange, FTX, Binance, etc. This now created huge pools of FTX at UST, Binance Rep UST, trading at its own price, not subject to Terra's exit tax fail-safe mechanism, right? So what that means is now Terra is trying to make sure that the UST is pegged to US dollar, but at the same time, it's getting traded on other exchanges, which is online exchanges. So now that causes a different type of pressure, because if people are not buying, then it all depends on supply and demand, right? So if people are not buying UST at $1, the exchange, at some point, the value would go down. So this continued the death spiral for Terra. Constantly, they were trying to stabilize UST, but at the same time, the off-chain peg was killing it. So even after dumping $1.5 billion, it could not save the off-chain pegs, right? The idle anchor deposits started exiting, and that caused a crippling effect on Monday and Tuesday. The peg went down to 73 cents, and even it went down to 60 cents. And by that time, Luna went from $100 last month, then 90, and then just literally in 2 days, Luna was trading in 20 bucks, right? So people thought, okay, and peg actually turned around to 90 cents. So I thought, okay, it's coming back up, and now things will be okay. But again, now Do Kwon was waiting for another bailout. So it dumped 1.5 billion of Luna at 50% discount to current prices. And this was the biggest mistake. This was a disaster. So now UST, Luna continued to go down from $20 to $4 very quickly. UST continued to go down, and the peg pretty much is done now. So at this point, if Luna or UST can come back, and then come back, but I would not recommend anyone buying it at this point, even though I ended up buying it because I had some buy orders which were sitting there, and I totally forgot about it. So that's another thing. A lot of times those buy orders are very helpful, but also you got to be careful and keep watching those buy orders as well. When you are trading like me or investing like me, where I'm on a lot of different exchanges, I forget about this. So this is an interesting story and lesson learned that you never know, or what could happen with any of these high-flying stocks or cryptos. Some of the things, though, I learned, or some thoughts I also learned from people like Mike Pomp and others, reading their newsletters, that there's a large number of people now kicking the team behind this technology while they're down. Now, remember, it's not easy to build this technology. There could always be some kind of issues, right? I know this is a big problem, but they may come back, they may not. Do go on, may create something else. So no idea, but I think they tried their best, just that they missed some critical components. Another thing which I keep telling is never invest more than you are willing to lose, right? We keep talking about that a lot, especially in crypto world. So you have to be very careful while you are investing. Of course, you want to get in. Amazon once drew down 95%. Tesla was down like crazy. Bitcoin has gone down 80% so many times, right? Just because something goes down in value a substantial amount during bear market or liquidity crisis doesn't mean they have no future value. Again, I'm not saying that for Luna, but we may see some more correction in the crypto world. So I wanted to throw it out there. And a lot of people are also telling me now, I was right. I knew this will happen. No, you did not. You never said that this will happen with Luna or UST, right? You never said that it was a rug pull. I didn't know that. And it's not a rug pull. It's just that badly designed technology product, which was exposed by intelligent market participants who had a lot of capital at their disposal. This is like GameStop, Robinhood frenzy last year, right? The UST peg was broken, and that was a big deal. But remember, even USDT and USDT DC pegs have been broken, right? So I think I have never promoted Luna or UST. Yes, I have always said that I'm investing and I love what they're doing, but that does not mean you should just jump in without understanding the underlying technology and why you want to invest in it for long term. Again, at this point, I don't think it's worth investing, but keep your eyes open, ears open, and see, keep watching the market. Let's see what happens. Thank you so much for watching, and I hope this was helpful.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!